Hello, people. Do you know what your credit score is? Do you know how to find it? Do you know what it's used for? We're going to answer all those questions today on Triple F.
What's happening, Triple F fans? We are back with the Big D and T.
That's it. Now what
D&T.
What are you wearing green for? I've never seen you
Oh
wear
man,
green
it's St. Patty's Day. I didn't want to get pinched. Somebody does though.
I know. Ouch.
Man,
Don't hurt your finger there.
Yeah, that's like all muscle. I didn't get anything there. There's no fat. It was just pure muscle. I couldn't even squeeze it. It's like steel.
I'm glad. I don't want you squeezing me anywhere over here. So,
man, I'm excited. This is a good one. I had heard rumors about what you're going to be covering today, and
what would that rumor be?
I heard it was something about credit, something about some scores.
That's not
some scores to settle about credit.
Yeah, that's not going to keep anybody here, watching us until the end of the video. You should have said we're going to be doing a beach podcast today.
Like a beach body?
Yeah, beach body. We're going to have bikinis at the end of it
What?
or something. So everybody was stayed for that.
Yes, I agree. Maybe that's what we're missing. Maybe that's why we don't have more
subscribers.
subscribers.
Yeah, I was at the beach last week. So,
yeah. So, subscribe. We need more subscribers. We need more people. I don't understand sometimes why do people don't share this more? I mean, this stuff is so good. I mean, if you listen to yours alone, I think just by watching your content, their credit scores would go up, right?
Yep.
And their overall wealth,
they'd be able to retire one day.
Their net worth would go up simply by watching your videos.
We have more viewers than we do subscribers, and so if you're a viewer that's not subscribed, shame on you.
Yeah, really.
And get out there and hit that subscribe. It takes like 2 seconds to hit the subscribe button. That way you're notified when we put new content out each week.
Yep.
Mm-hmm. So
I had an energy drink before this, by the way, so I don't fall asleep.
Good. Well, so
as excited as I am about this.
So even though it's St. Patty's Day and you're supposed to be drinking green alcohol, I think you may want a cup of coffee. So
what do you guys think about this sweatshirt? It's pretty nice, huh? Like that? Got the flag with the AF, Anytime Fitness.
Yeah. So are they sponsored? So is Anytime Fitness sponsoring our videos?
Yep.
Today? Okay.
Yep. They basically paid for.
They paid for all the equipment that we have here.
This cable.
All right. So today, as Tyron mentioned, we're going to talk about credit report and credit scores. And man, when you first hear that, you're thinking, oh my gosh, how can we ever talk about that for the next 20 to 30 minutes?
Oh my, is it really going to be that long?
But I'm going to show you how much fun it can be.
How is this going to be fun?
So let me ask you a question. What's your credit score?
Last time I checked, I was over 800.
Where'd you check?
What's the app? Credit
Karma or something?
Credit Karma. Credit Karma.
Did you pay for that?
No, it's the free version.
The free version, okay. Because a lot of times you can go to your credit card statements or your banks and they have your credit score posted on there also. That's where I get it from.
It fluctuates. It fluctuates between 790 and 810.
Okay, so that's good. So what is a credit report and why is it so important? Because we always
I don't even need credit.
When I see people and they find out I have to do with finance, they're always asking me about credit score, credit report. If I open this account, if I close this account, what's it going to do and all that. And so I just wanted to kind of unveil it today and kind of give you some information. And it is very important. I mean, your credit report is basically a 7 to 10 year record of your financial history or activity. Anytime you swipe a credit card, anytime you make a payment, anytime you open up a new line of credit, you buy a car, you buy a house, all of that is recorded on your credit report.
Somebody's watching.
Somebody's watching. And you don't even know it. You don't even know it's being reported.
Watching me.
You don't even know it's being reported. Mm-hmm. But it's about 7 to 10 years. Things drop off after 7 years or 10 years. It includes all your personal information. It has your social security numbers,
and
your
they're
address.
Watching me.
They're watching you, man. It's Big Brother.
It's a good song.
It's Big Brother. And it's got loan, credit card account information, payment history. It's got any debt that you've had basically in your life. If you go, it's really kind of fun to look at because some of them have stuff back from college. I mean, you may have like accounts that you opened up back to get that free Chick-fil-A sandwich back in college. When the credit card companies are all on campus trying to recruit everybody to open up their credit cards, they give them free Chick-fil-A or free this or free ice cream or whatever.
Man,
those are still in your credit report, believe it or not. Those accounts are. You'll be looking at it like, what is this? When did I open this? You don't even remember it. Yep. And so all of this is compiled by the 3 basic credit agencies: Equifax, Experian, and TransUnion. There are other smaller ones, but those are the big 3 that all lenders look toward in order to assess your credit and your credit worthiness. And it really dictates your ability to borrow and repay. But one thing people don't realize, it impacts the interest rate that you pay on debt also.
True.
So if you have a bad credit score, you can pay a lot more interest.
Now, is it a goal in wealth to like get to the point where you simply don't have to worry about your credit score?
I think you always have to worry about it. Now, you're going to hear some gurus out there say, oh, don't worry about your credit score. Just do this, do this. If you're dead for 7 years, it'll be zero. Or if you don't use credit for 7 years, it'll be zero because they'll think you're dead. Because if you don't use credit, let's just say you just use no credit, you did nothing for 7 years, you'd have a credit score of zero. And that's because they assume anybody hadn't done anything for 7 years is probably dead by now. So
interesting. I had not heard that.
Yeah. So after 7 years, everything kind of drops off of it.
So would you say, though, that in general, once you get to a certain wealth category, that usually your credit score is only really applicable when it comes to how you're able to obtain money in relation to an interest rate?
No, and we're going to talk about that, the other ways it impacts your life. There's other things other than just interest rates.
Okay, well, I'm very curious.
Yeah. So I
might stay awake for this one.
So that's a credit report. What's a credit score?
Some sort of composite between the three agencies?
Yeah, it's a 3-digit number,
yeah,
typically between 300 and 850.
Oh, I got it right here.
There it is.
It helps lenders assess risk of lending you money.
There you go.
It
represents your credit worthiness. It helps lenders assess the risk of lending you money.
Yeah.
And so that's really who use it. All lenders. Anytime you apply for credit, that's who's using it. It's calculated from your credit report. And there are certain components that we're going to talk about that make it up. It's still a little fuzzy even after you figure out what the components are because you don't know exactly every item that they're looking at. But let's talk first about why does a good credit report matter? So this goes back to what you were asking. Why do we care? Why do we care if it's 300, if it's 700, if it's 850? Why do we care? And I'll always tell people, don't go into debt just for a good credit score. So one of the questions I get from a lot of people is, my son just graduated from high school. He's going to go to college. Should I get him a credit card so that he can start building a good credit? No, you don't have to do any of that stuff. As they go through life, they'll get their own credit, and as they pay that off, as they get a mortgage, an auto loan, or whatever, and they pay that off, they'll automatically build a credit score. There's no rush to get a great credit score when you're in college. All you're doing there is asking for them to take on debt, and that's not really not really what you want to do. So you don't want to go into debt just for a good credit score. You're naturally through life, you're going to come across enough situations that you're going to have enough credit history and enough debt that you're going to get a credit score. So these are some ways that credit scores may impact you. Lower interest rates, like we talked about. High score means lower risk borrower. But think about it on a mortgage. If you have a $600,000 or $700,000 mortgage, a 0.5%.
That's a lot of money.
Of an interest rate, because you have a good credit score versus a mediocre credit score, it could be tens of thousands of dollars over the life of that loan that you pay in interest. And so interest rate means a lot, especially when you're talking about car loans and mortgages and some of those big purchases that we make. And so the other way it impacts you is easier rental and housing approvals. So when you go to rent an apartment, you don't even you don't even know what they're doing, but before they'll rent you that apartment, before they'll approve that application, they're going to pull your credit report and see what kind of score you have. If you have a 400, they're going to think, well, this guy's or girl's going to be a horrible renter. They're not going to pay their rent every month, and I'm going to have to spend a lot of time and effort and money to get them evicted that I don't want to have to spend, and so they'll turn you down for rent. And I've seen that happen a lot. That's probably the one place, as far as approvals go, is your housing, whether you're renting a house or in an apartment, they really look close at the rental score. I actually had a rental house one time that I was renting out, and I'd go check the people's credit score before I ever rented them the house. And I turned down a couple of people because it was just a terrible score.
Too risky.
A lot of times people will rent too that can't get a home loan, so they try to rent. Well, they can't get a home loan because they don't pay their bills. And so that's not 100% of the case. Sometimes people want to rent for different reasons, but that's one reason why, and that's why the landlords check that. And you'll normally need about a 620 minimum in order to get a conventional loan to buy a house, a 620 to rent an apartment, and get a good approval on an apartment. The other place that credit score impacts you is your utility deposits and your phone plans. When you buy a house, you go into it, you got to set up electricity, gas, water. They're going to ask for deposits if you have a bad credit score. And so if you have a good credit score, a lot of times you get by with zero deposits. I mean, that used to be a bigger deal, I think, than it is now. We used to have to pay deposits anytime we'd set up electricity, like $150 deposit.
I remember that.
And this is one that people don't really understand either, but you get better insurance premiums.
You mean like life insurance?
Life insurance, car insurance mostly.
Car insurance?
Car, auto, and home insurance.
I'm trying to think if I've ever had a credit, or maybe they have run my credit for my car insurance.
They almost always will. Sometimes it's called a soft inquiry. And so
okay, a soft, not a hard. Okay,
not a hard. You're not looking to open up a credit account. You're just looking. They're just looking to see what kind of borrower.
Because I hate it when my credit gets dinged for like someone running a hard credit.
Yeah. That's any time you apply for credit, that's a hard inquiry. But so insurance premiums. But when you get your auto insurance, they'll almost always run your credit, because what has been found through studies is that a person with a really good credit score is a lower risk. To insure. And so they normally have their life together a little bit more. They've paid their bills. They don't have the stress involved with debt collectors calling them at night. And so people with bad credit scores that are really low, they tend to have more accidents. They tend to make more claims on their insurance policies. And that's just kind of the facts. That's just what happens. Yeah. And this is another one, is employment opportunities. When you apply for a job, not all, but some employers, depending on what you're in, if you're into finance, if you're trying to get a job in banking, if you're trying to get a job where there's going to be there's a lot of honesty involved, that you really,
that's
really
have
to check.
That's quite an extensive background check for in the finance sector.
Do you do that for any time employees? You don't run credit checks?
Man, we check everything. Yeah. We contact their elementary school teachers.
Yeah, wow.
Yeah, even their preschool teachers.
I don't think I qualify to run one of your gyms. Man.
That's why we haven't approached you, because we already did a background check on you.
You already found out all my skeletons. Did all my skeletons fall out of the closet?
Yeah, you couldn't get along with others. You were bigger, and you took advantage of that.
But there are some employers that actually run credit checks, and that can impact. If it's between you and another person, and they got a 800, and you're sitting here with a 600, that may be the determining factor in the difference for hiring somebody. Mm-hmm. So, I know you're a cook. You like to cook, right?
No.
You don't like to cook? Who cooks in your house?
Well, I mean, my wife for sure. Now, when I'm dieting, I'll cook. But it's a very basic, chicken and vegetables type of.
So I like to.
I did bake a cake.
You did
for my wife's birthday. Yeah. You saw that?
I saw that on the other video. Yep.
Yeah. We did a podcast on that. We actually did a podcast while we were baking the cake.
I know. I saw that, but you never showed the end result. What did it look like?
Yeah, I did at the beginning.
Oh, you showed what it was at the beginning?
Yeah, at the beginning, when we introduced the video, hey, this is the...
I didn't see that. I wasn't putting it together. I just saw you slip it in the oven at the end of the video.
I did that, but at the beginning, when we did the intro, we're like, hey, this is we're going to be...
Was it edible?
Of course, it was great. Oh, yeah. Go check it out. Hey guys, if you like this video, would you please subscribe? It really doesn't take very much time at all. Just click the subscribe button, click the like, share it with somebody if you like. But this really, really helps the algorithms get this message out to as many people as possible. We really think it helps. And so do that for us. It's the only thing we ask. Now, back to the video. LDS True Living.
There you go. And so picture this now. You're making a big pot of stew.
Yeah.
Okay. You're making a big pot of credit score stew.
Yeah.
Okay. What are the 5 ingredients that we use to cook up a good credit score? So these are the ingredients. These are the things that Equifax and Experian and TransUnion, these are the things that they use to come up with your credit score. The biggest one by far, and it makes sense, is payment history. That's like 35% of your score.
Your track record.
Exactly. Have you paid bills on time, every time? And if you go to your credit report, you'll see all the months of the years listed for the last 7 years. And anytime you missed a payment or were late for a payment, there will be a ding on that credit score, and that affects your score. Over time, it becomes less of an impact, but boy, when it first happens, it can be quite a big ding on your score. Credit utilization, and what this is if you have, say, $10,000 of open credit, they want you to use 30% or less, preferably 10% of that credit line, because a good borrower doesn't max everything out. They only use a certain percentage of what they have available. And a good example of this, for me, this past month, I usually carry about an 825 or so credit score. But this past month, we booked a vacation. We put like $20,000 on this credit card for this vacation that we were fully intending to pay off in the next 2 weeks.
Dropped to like 500.
But that credit score is a snapshot at any point in time during the month. And they happened to hit it before my payment. Yeah. And so my credit utilization must have gone down, because I went from like 725 or 825 to like 790, which is still good. But man, that's like a big drop.
You can't get any loans now.
No, I'm done, man. I can't borrow any money ever.
Disqualified.
And it also is the other place that I can back you is old accounts. I get this all the time. I don't use this credit card anymore. Should I close this old account? Should I close this old, Visa account or MasterCard account? And what I would say is no. Just tear the card up and don't use it. But once you close that account, you've shrunk your available credit line, and that messes with the ratios that they look at for a good score. And if you just tear it up and never use it, it'll just sit there in perpetuity. And at some point, if you're not worried about that anymore, you're not worried about your credit score, just cancel the account. But
that's what I was saying.
When you do it, it will be a ding on your credit score. So you don't want to do that right before you're getting a mortgage on your house. Okay.
Yeah, get lots of credit cards before you get a mortgage on your house.
So what I tell people,
don't use them though.
Right, avoid making any drastic changes before you buy a house. I get this. I mean, I've talked to lenders before, and you wouldn't believe how many people apply for a mortgage. And then while they're in the approval process, they go out and open up a new furniture loan through a furniture retailer. Put $10,000 of credit on there while they're being approved. They go out and they make purchases of lawnmowers and stuff. For the house.
You have to do this stuff.
And so all of this stuff is done, but you don't want to do it while they're trying to approve you for a loan, because they're going to look at your credit score at a point in time, and and this will impact all those things will impact the amount you're putting on credit. Either buy it before, a month or two before, or wait until after you close on the house to go and buy all this stuff.
Yeah, it becomes a very expensive set of furniture.
Yeah, because then you're writing letters as to what happened. I mean, they will contact you and say, hey, your credit score went down 50 points.
Looking back, what did you do?
What are you doing out there?
We're buying our lawn furniture. Jeez, we've got to live in this house.
That's right. Yeah, but we're loaning you $600,000, and so now you're a high credit risk.
This can't be the first time you guys have seen this.
Hey, you're assuming the mortgage companies have a brain and that they actually think about these things and talk about it. It's all just mechanical, man. When you get approved for a loan, it's all mechanical. So the third ingredient, other than payment history and credit utilization, is length of credit history. Are you like 22 years old and you've got one credit card you opened 6 months ago?
I wish I was 22.
Yeah. You wish you looked like you were 22.
Wish I looked like I was 22.
Yeah. But so what's your length of credit history? So the longer you have a history out there, the more credit you've established in the past and done right with and paid it on time, then the better your credit score is. If you're new to credit, that's why kids that are 18 to 22 or whatever, they have a hard time getting their credit score up at the beginning because all of their credit is new credit. But over time, they will get it. They will get it up to a certain point. Just pay things on time or early, man, every time, every month. Yeah. The fourth thing is credit mix. What kind of credit do you have? Do you have mortgages, auto loans, credit cards? They want to see a lot of stuff. They don't want to just see you just have nothing but a mortgage out there. They don't want to see that you've only had one car in the past 30 years, one car loan. Credit mix, credit bureaus like to see that you use credit. They just want to see that you don't max things out and that you pay things on time.
You're being responsible.
Yeah, you're being responsible. And the final thing is new credit. This gets back a little bit to where, with housing and stuff like that. How many accounts have you opened up lately? So
this is where it might backfire to open up new accounts.
Exactly.
Before.
When you open a new account, when you close a new account,
there's always a ding.
There's always a ding. And it's not huge. It's only 10% of the mix, and that's on the chart that you see here above us here. But yeah, those are the five things. You don't see it there? We will by the magic of technology. You're going to show this to people. See,
we can look at it as if it's there.
So payment history, credit utilization, length of credit history, credit mix, and new credit.
Yeah. Okay.
And so the next question I know Tyron has is, what is considered a good score versus a bad score?
Well, I mean, I would say that anything, well, you mentioned 650 for you being able to get a mortgage. So I'm going to guess it's somewhere in the mid 600s and above.
Yeah.
Is that right?
Yeah, it's pretty, 670 is good.
Oh, okay. Yeah. So that makes sense.
But there's actually more ranges than that in FICO. So FICO has a bunch of different ranges. They have like 5 different ranges. First of all, you know what FICO means? You know what that stands for?
First, the F is federal.
No.
Dang.
Fair Isaac Corporation.
Really?
2 guys. One guy's last name was Fair, and the other guy's name was Isaac.
I think we should rename it.
Some decades ago, in the mid-1900s, they came up with the standardized credit reporting system that we know as FICO today.
We should come up with our own, like Federal Identity Credit
Organization.
There you go.
We're going to change that today here on Triple
I think we
F.
should just name it. I don't know why that's dumb.
So poor is 300 to 580.
Mainly dumb because I didn't get it right.
Yeah. So poor is 300 to 580. Were you ever at 300 to 580 in your credit score?
No, I don't think so. No. And if I was that low, I wasn't checking it, obviously.
You know what I find out sometime when I used to counsel young couples who'd come in, one of them would be, at 700, the other was down here at like 400. And it's like, can we ever buy a house?
Yeah, no.
Not together. Not if one of you has a 400 credit score. So, hey, remember what we said about that first date that you go out? You got to know what the person's credit score is if they want a second date, because if you get somebody at the wrong credit score, you're going to be stuck for life, because life can be miserable if you have a bad credit score.
I think there are some good scorecards out there that you can judge some people by.
Yeah. But if you have a bad credit score, remember, we're talking about insurance premiums. We're talking about buying a house, buying a car, doing almost anything in today's world. Yeah. So a fair score is 580 to 670. So that's that needs repair. If you're at 580 to 670, you need to repair some if you intend to buy a house. Mm-hmm. Good is 670 to 740. So that's when you get your foot in the door to buy a house. Is usually 670 to 740. They'll talk to you. They'll let you fill out an application, and considering that there's nothing else wrong, you could probably get a loan at 670 to 740. Yeah. But it won't be the best interest rate. If you want the best interest rate, you've got to step up to 740 to 800. Mm-hmm. That's considered very good, and 800 to 850 is exceptional. So poor, fair, good, very good, exceptional. And so, is a credit score important? I don't want you to just spend your whole life trying to improve your credit score, but it's one of those that takes care of itself if you do the right things. You pay your bills that you've signed on to pay for. You pay your credit cards off. You don't max everything out. Mm-hmm. You're not. That's the most exciting time of the month shouldn't be trying to figure out how to pay a credit card off in your finances. Okay, it should be pretty routine. Mm-hmm. As of 2025.
What?
So what do you think the average FICO score is in the U.S.?
2025? I did not see. So the app, man, I don't think it's that high. I would say probably 550.
715.
Really?
Which surprised me also. So 715. So people are actually doing a pretty good job.
That's pretty good.
But if you didn't have the FICO score, if you didn't have all this credit, and people probably wouldn't pay they wouldn't pay much attention to it, because now people, a lot of times they pay bills and they think, well, I don't want my credit score to get hit.
Yeah.
And so it's kind of a motivator, Yep. But 715, that was pretty high. That was higher than I thought. I thought it'd be down in probably at 600.
I mean, the number of delinquent accounts we have at Anytime Fitness, people don't want to pay their bills. You'd think that number would be lower.
Do you report them to the credit bureau?
Yeah. So this is something I actually thought about this if I would ever mention this. So we do now. I have to say we don't. But what happens is that after you get to a certain aging, so there's something called an aging report, or an account will age. Mm-hmm. And so let's say it's delinquent for more than 120 days or something like that. Then it will be sent over to a collection agency. And then the collection agency will then report it to the three bureaus. And then it will impact your credit.
Right. It's kind of how medical, I get a question all the time on medical debt. Medical debt is not reported to the credit agencies. So if you go to the hospital, you owe $5,000, it's not reported. Mm-hmm. They'll bill you about 3 or 4 months. Mm-hmm. And then if they don't hear from you, they're going to assume you're not going to pay it, and they're going to go over to a credit reporting agency. Mm-hmm. Once it goes to that third-party credit reporting agency, they do report things to the credit bureau. And so I always thought the best strategy with medical debt is to talk to the facility.
Keep it with them.
Try to make minimum payments. They're very good at working, on a payment plan.
It's like
with
student
you.
loans.
I mean, medical industry's got good heart, so they will work with you. If you can only pay $50, as long as you're paying something and they're in their system showing, okay, they're here, they're still working on this. They're going to do a lot better by working with you on it, because once they sell it to a credit collection agency, they're only going to get maybe 10 cents on the dollar. So if they sell a $1,000 bill to a credit reporting agency, they're only going to get like $100 for that. And then the credit collection company will come after you fiercely. And if you don't pay them, then it will hit your credit score. So it's best to keep that debt with them. But you only have I've seen that before. You only have 3 or 4 months, and so you can't just go a year and sit on it for 6 months or a year. They'll sell it. They won't even tell you they're selling it. And the next thing you know, you're hearing from a credit collection agency.
Well, what's funny is on this side of it, like on the business side, every now and then we'll get a check in the mail from our credit from the place that does the debt collection. And I don't even think about it. Like I don't even once it goes to collection, I don't even think about the accounts anymore. For me,
Right.
they're basically gone. We don't contact them anymore, anything like that. But then every now and then we'll get these checks in the mail, and it'll just be like, I don't know. It feels kind of like free money, but it's like it's that small percentage that they pay back to us, and then I think it's 50% of whatever they're able to collect.
It depends on what it is. I know medical companies are 10 to 15. They only get like 10 to 15% of the debt that the credit collector will pay for. But and so that's that. And so mortgages. So people ask about mortgages, interest rates. So 620 is, like I said before, get your foot in the door on a mortgage. But if you want the best interest rate, you've got to have about a 740 or better. So if you can get about, and then anything over 740, you're kind of showing off, So isn't that what Forrest Gump said? Anything a credit score over 740, and you're just showing off.
Is that what he said?
No, I don't think it's credit score. I think it was something.
I think it's something else.
Oh, I think he said that once you've made all that you ever need in life, money-wise, the rest is just showing off.
Yeah, that makes sense.
But I use it for credit score because I think it's a pretty good quote. So I just...
Yeah, there you go. Yeah, just keep quoting it from Forrest Gump. It's funny how, like, Forrest Gump, man, that's like generational. I'm surprised at the number of young people that know that movie.
He had so much good advice in his movie.
Yeah.
He's just so common sense. I bet he had a good credit score.
He probably did.
So the final question you want to know is, okay, I've got my credit score. It's 500 or 600 or maybe it's 700. How do I improve and maintain a good credit score? What do I have to do? And so it comes down to just a few simple things. Pay bills on time.
Yep.
Payment history, as we said, is the biggest factor in your score. Keep your credit utilization low. Don't max out your credit cards. Don't close a bunch of credit cards at one time and shrink that amount of credit line that you have. They're looking for using no more than about 30% of your total credit line at any one point in time. They prefer 10%. If you want the 850 credit score, you got to probably have more like 10% utilization rate. Avoid excessive new credit. Limit the amount of new credit because that will temporarily lower your score. Okay, and it could last for 3 months, 6 months, and it may not matter, but depending on what you have going on in your life, if you're trying to buy something at that point in time. And this is probably an important one that there was a law passed some years ago that everyone is allowed one free credit report from each one of the agencies, all three of the agencies, one time a year. It used to be you had to pay to get your credit report. Yeah. And so Congress passed a law. So if you go to the right website, which I'm going to give you, you get one free credit report from TransUnion and Equifax and Experian, one per year from each one of those agencies. So you can really get 3 different reports per year.
And is it detailed or is it just
It is your credit report.
Everything that you do.
Everything, man. And probably 80% of people have errors on there, and it may be like me. I was a junior. I didn't even know my dad. So when I printed mine off, I had all my mom and dad stuff on there from his stuff, and they may have the wrong address on there. It may have an account you've never heard of before. Fortunately, my mom and dad had spectacular credit, so I never corrected it. I just
you're like, oh, thanks, Dad.
Yeah, thanks, Dad.
Mom.
If it wasn't for you, I'd have a really low credit score. Yeah. But that website, and it's important, it's not, you would think it'd be freecreditreport.com, but that's not what it is. It's annualcreditreport.com. That's the only place you can go that I know of and get a free credit report, and that's the official site. So annualcreditreport.com. I tried one time, freecreditreport.com, and you don't get anything there except, they want you to pay for it. So, and so what I do is I go out probably each year, and I don't do all 3 of them in a year, but I'll change them. Like I'll do maybe one year I'll do Experian, then the next year I'll maybe do TransUnion. But I usually pull from each one of them at least once every 3 years. But every year I'll go out and pull it just to see if anything's out there. It's really a good way to catch any identity theft and just to see what's going on in your credit report, because it's out there whether you want to believe it or not, and whether you know anything about it. It's out there. You just don't know what it is until you look at it and see it. Yeah. And it's pretty easy to correct. I mean, you write them a letter. They have a place where you can submit errors, and they'll check it out, and they'll fix your credit report. But there could be something out there if you don't know why you have a low credit score. If you think I've paid everything online, on time, there may be something out there that you don't even know about on your credit report. That could be why your credit score is low. And so the other question that comes up is, are these credit repair companies good? Once you start doing the searches, you'll start getting all kinds of emails and all types of inquiries from companies saying, we can fix your credit, we can do this, it's just a small fee for $600, we can improve your credit score. Nobody can legally improve your credit score by not doing the right thing. So the only things they can correct are things that are really wrong. So they can't go out and correct your credit score just by you giving them access and them going out there and magically fixing your credit score. The only thing you can have taken off of your credit report, the only thing you have taken off your credit report is something that is wrong. That is something you can do. And that's something I do.
Don't fall for some of that?
Don't fall for that. It's another one. It's another public service announcement. Don't pay somebody $600 or $1,000 to repair your credit.
If you want to pay someone, you could pay us. You can just send.
Yeah.
We'll tell you.
I'll go on annualcreditreport.com, pull off your report, and then you can tell me everything that's wrong, and then for $1,000, I'll let them know.
Yeah, we're in the wrong business.
We are.
Got to switch.
But that's a big business, this credit repair stuff, because when people panic, they get ready to buy a house, and they're told their credit score is 650, and it's got to be 740. And so they'll go out and pay $600 or $1,000 to a credit repair company, and all they can do is fix what's legitimately wrong. And if there's nothing wrong, there's nothing they can do to fix your score. And so it's really just a scam. I don't even know why they have them. But the last thought is just be intentional and be financially aware. Man, if you're just intentional about paying bills on time, financially aware, set up automatic payments where you can. Payments. That's what I do. That way you never miss a payment. I do it with all my utilities, with my, whatever. All my bills are pretty much auto pay. And if you do that, you'll always be on time.
You don't have to pay any stupid tax.
You won't pay any stupid tax. You won't have to pay anybody to repair your credit history, because it'll be great.
Man, I wish, the amount of money that I would have, if I hadn't paid stupid tax as much as I have in my life.
We all pay stupid
where
tax.
You are.
Yeah. No, I pay a lot of stupid tax.
You've done a better job than me.
Fortunately, none of it's been catastrophic stupid tax.
Yeah.
There's a little stupid tax all through all of our lives, and so you can't beat yourself up over that. That's just the way the system's set up, I think. So, But that's it, man.
Cool.
Did you learn anything?
Yeah. Average score in the U.S. 715.
715. Yeah.
That's a surprise.
So stay above average. You don't want to be average. If you're watching this podcast,
I thought I was doing really well.
If you're watching this podcast, you're not average. You're above average.
I'm not even 100 points over the average.
The people watching this podcast are way above average intelligence. Don't tell any of those.
Watching this.
Don't tell those people that aren't watching us that I said that. But all of you people that are watching this are above average, and we appreciate you, and we want you to become wealthy and healthy.
Yeah.
And of course, wise. But that's it, man. So until next time.
Good job, man.
We will see you later. Triple F off.
Boom, boom, boom. See ya.